In this video, you are going to learn liquidity sweep. This is going to be a comprehensive video so that at least you can try to understand it, but we are going to use some different things. Maybe you have seen them somewhere else, but we are going to use numbers so that at least you can understand where the market is likely to sweep the previous high or the previous low. So let's begin with this video. So in this video, we are going to touch on a basic structure and some complex structures. On this 5 wave here, that is why it is very small here, is because we are not going to touch on it too much, but you will understand why is that. So basically we are going to touch on the 7 wave structure and the 9 wave structure. This is the only thing that we need to focus on throughout this video. And then by the end of this video, you will be able to know where the market is likely to manipulate the previous high and how to count those 7 waves and 9 waves. And there's still an 11 wave structure, but in this video we are not going to touch on that because that one is very difficult for someone to understand it after watching this video alone. So let's start with the basic structures here. We have these 3 structures here. This first one here is the one that, let's say we have this one is our impulse. Then you will see that the market is likely to come and make this high here. We have this high, and then we will have this low. But suddenly we liquidate this previous high, and then the market come down and liquidate this previous low. This is where you'll be looking to go long. This is where you'll be looking to go short. Okay? And then on this second one here, we can see that we have an internal swing low. But on this one here, price doesn't liquidate this previous high here. It just come down to liquidate this low here. What I mean is that price will trade below this low before we can see a shift of price. Then on the last one here, we can clearly see that price here on the starting point of the impulse, you can clearly see that we have this high, and then we have some internal lower low, lower low, lower low, and lower highs. Lower highs here. But then price shoot to the upside. This pattern here, you will see it mostly in this area here. This pattern here that is forming here, when it breaks this starting point, you will see that this last lower low will trade below this low here. Let's say you say this is your starting point, and then suddenly you see that price is likely to trade below this low. Most of the time you'll see this kind of structure at the end of this wave here. But you will understand what I mean when we go throughout this video. Right now, I want to show you where price is likely to sweep that liquidity. From here, we can clearly see that on the first one, price trade above this high and below this low. On the second one, price only trade below the internal swing low before it can continue with the trend. This one, it trade below this low and this low before we can see a continuation in the market. So let's look at some other patterns where price is likely to come and manipulate the structures. Here we can see that we have a trend line. This is where price is likely to come and manipulate. Here you can see that price broke this low here, making this as a breakout here. And then most of the people will wait for this correction or maybe a pullback before they can see price moving lower. But suddenly price shift to the upside once more before it can drop lower. This is where in this video we are going to fix those kind of mistakes. And then we have equal lows and equal highs. But this is already subjective because price is never equal. You'll see that this high and this high will be very close. Even this low and this low. Price will come and manipulate this equal highs and then drop lower to manipulate this equal lows here before we can see another shift in market structure here or another impulsive wave. And another thing is that price on support and resistance level, price is likely to come and trade above the previous support or previous resistance here, or even on the support level here. You can clearly see by the structure that price traded below this support level here, and then shift to the upside, broke this previous resistance area, and then price continue with the trend. But you don't have to worry because you can see that this is like complex structures. But when we move forward with this video, you'll understand those kind of things and mistakes that we are going to fix here. So let's move on to this one here. If you want to clearly understand where the market is likely to manipulate, you have to understand the starting point of that impulse. Mostly you'll see the structure being very, very bullish. You'll see a strong candlesticks here, and then price will make this high. When price shift to the downside, you are waiting for price to at least manipulate this high before you can take a trade lower. But let me show you something. When price start to move to the upside, this is where you should start counting your waves to the upside. And we start from this one here, 1 and 2. And this 2, 4, and 6 has to trade inside this waves on top. Meaning, when you see 1, 2 has to trade here. It must not break this. And then we move forward, price breaks the previous high, and then it comes down inside the range of number 3 here. And then it moves to the upside once more to make the 5th wave. This is the area where I told you that we are not going to focus on this one. And then we have another wave, which is number 6 here. And then here, price will make the last move, which will trade above this high here. And then this is where you should be looking to take your sell positions. But you can use your own strategy to enter the market right here. Any strategy with confirmations will be good to enter the market right here. Only if you have these structures here. And another thing is that the initial target here, after making this high here, it should be here. This is the first target, this is the second target, and then this is the third. Take profit. Unless if you are going to see the 9th wave here, which is going to be like this before we can see the market moving to the downside. That's how at least you should understand it. If I may repeat once more, is that here on the first wave, price will move to the upside. It will come down without breaking the starting point here. It will move to number 3, breaking this high of number 1, and then price will trade inside the wave 3 here. Meaning, what I mean is that price must not do something like this. If we have the starting point here and then price do something like this, we have 1 and then a 2, 3, this 4 must not be around this area here. Number 4 should at least be inside the range of this 3 here. We must not have this gap, this huge gap here, because that will be an impulsive wave where the market will just move to the upside. So here we can see this one is a very complex one here, but this is just the same thing that is going to happen when you see structures in the market. We have this high here, we have this high, and then we have a starting point here. Starting point, we have 1, 2, and then we have 3, 4, and we can clearly see that 4 is trading inside this range. Even number 2 is trading inside this range. We have 6, which is trading inside the range of number 5, and then we have this one here. That is why you see the market moving to the downside, breaking this 6 here, making another liquidity sweep before we can see another shift in market structure to the upside. And then the same thing will follow here. That is why sometimes after the market has swept your liquidity, you will see that price will make another high here. But if you understand everything in this area here, you'll understand that, okay, right now we are on the 5th wave. So that means the market will move to the downside and then shoot to the upside to make another high before we can drop lower aggressively. And then the whole structure here, this whole structure will look something like this in simplest term. I hope you understand it. All you have to do is learn to count those waves so that at least you can understand the structure here. So let's move on to another one. This one is having 9 waves here. We have 9 waves. And right now, let's say you want the market to sweep this liquidity, but we are on the 7th wave. So that means most of the people will look for this breakout here and then look to go down. But because the market is not done yet, it will make the 9th wave. And obviously there is a way to see where this move is ending, all of them here. You can predict where this market is going to react from. You can predict this, even this one here. But that one will be on another video in the near future. So let's look on how to count the waves the right way right now. Because right now we have this is the starting point. We have the starting point here. And then we have this high. So to correctly count these waves here, guys, you have to understand that, okay, this one should not have been in here. Let me fix it very quickly. Okay, right now we have this waves here. This is the high, and then the market will shoot to the downside. Then we have the starting point of the 7th wave. We start here and then price will move to the downside without even breaking this low here. When you see number 2 here, price will move to the upside, because basically right now we don't have a new high. We'll say this is the high, and then we'll put a question mark here, and then price will come down because we are waiting for only the 7th wave. And then we have this low here, and then suddenly price makes another high, and then price shoot to the downside. When price breaks this low here, just know that this was not the initial high. The correct high is this one here. And then we will have this low here. Then price will move to the upside, making this high here. And then we have this low, we have this low. Price will break them, but without even breaking this 4 here. Price will just hold. You will see those things when we move on to the chart. And then suddenly, we can see that most of the people will try to sell based on this resistance level here. Resistance level. And then suddenly price shoot to the upside, taking their stop losses before the market can shoot to the downside. Even though their analysis was correct, but the market will do something crazy so that people can leave the market or lose a lot of money. So let's look at a real example. Maybe this will be very clear. Here we have a complicated chart here. You can clearly see that there is nothing that you can read from this structure here. This is just complex structure. But because we want to put everything into practice, we have to look at price in the right way. Let's start from here until we reach this area here. We have this low here, but then if you look closely, price broke this high here, making this a low. So that means right now, okay, what I mean is that it made this low, and then we have this high, and then we have this low. So that means right now we have this as our first structure. We have the high, we have the low, and then this is 1, this is 2, and then we break this, making this a 3 and then a 4. You can clearly see that price is returning back, and then we have this 5, and then we have this as our 6, and then we have 7 here, and then we can see a move to the upside. I hope right now you can see it, but don't worry, you are going to do a few examples so that everything can be at least clear. And then from here, we can see that we have a break of market structure here. Price move to the upside, makes this high, we have a low, makes this high, and we make another low. So that means right now, this is number 1 here. This is number 2. Because price should not trade below here after breaking this high here. And then we move to the upside once more. We have this high, we have this high, and then price breaks this low, and then we have this low. So that means right now we are on 3, and then we have 4, because price traded below this low and above this high. And then we move forward here before we can see price moving to the downside. And then we have this. This is our 5 here. But inside this 5 here, we have to look at how price behaved, because the most important thing that we need to focus on is the 7th and the 9th wave. This is the only thing that you need to focus on this video alone, because this is not a trading strategy. This is a guide to see where the market is likely to reverse most of the time. And look closely, guys. Let me use a different color. We have this high, we have this low, we have this high, we have this low, we have this high, we have this low, another high, low, and then another high. So let's draw the wave here. We have this move 1, 2, 3, 4, 5, 6, 7, 8, 9. So if you were looking to enter the market on the 7th wave here, then the market will likely stop you out, and we can clearly see that price traded above this previous high. So to take the trade on the 7th wave is because we avoid getting stopped out too early, and then this will help us to get stopped out at least once, not twice. Okay? And then that is why you see this move to the downside. And as I said in the beginning of the video, is that here price should be very aggressive to the upside. But using price action here, for me and our private group members, there is no way we can enter the market here. They will enter around this area because of a certain price action pattern. I hope you understand it. This is the area where we will be looking to go short after this 9th wave here. And then we move to the downside. And as I said before, is that if the market moves and makes a high and then makes a new low, that means right now we are not looking at a correction. We are looking at something that is called an impulse. That is why we have this gap here. And then for this impulse here, we can clearly see that we have 1, 2, 3, 4, and the 5 wave. And then we have this correction here. And then even inside this correction here, we can clearly see that structure once more. We have this 1, 2, 3, 4, 5, 6, and then 7 here. And then we look for the market to push to the downside. And here, look closely here. I'm going to remove everything here. And look with me here. This is 1, okay? This is 2. As I said before, if you see that the market is making something like this and breaks this low, that means you have to consider this move as your whole correction. And then that is why you have this move here to make the 7th one. And also another thing that I have mentioned in the beginning of the video is that price should be very aggressive here. That is why you see this move. And then the market drop lower. I hope you understand it in this way, guys. I'm trying to be as low as possible. Slow, low, not low, slow. Let's move on. So then the 9th, the 7th, and the 9th wave, you should look for them here or even at the end of the trend. Mostly for price to be clear, looking at 2 or 3 in the lower time frame or below, it will be very clear. Like, let's see right now, you have this low here, let's say this is not a complete low, but you don't have a clear view of this area here. If let's say right now you are on the 4 hours time frame, you'll move on maybe to the 30 minutes to see the structure very clearly here, to find the 7th or the 9th wave. And let's say on the starting point here, price breaks this. That means you are looking at something that is different right now. Let me show you this structure in practical manner. You can clearly see that right now, let's say you are predicting that this is your 1, this is your 2. But on 4 here, you can clearly see that on the 5th, on the third one here, let me do something like this. Here, you can clearly see that on this 4th one, it's not inside this range here. It's just trading above, making a new high. That means right now you're looking at a different structure. So at the end of this wave here, you have to look for that structure. And here we can clearly see a perfect one here. We have a 1, we have a 2, we have a 3 here, and then we have a 4, have a 5, and then a 6, and then a 7 here. And here, this is where you'll be looking to go short. This one here is just a 5 structure. We have 1, a 2, 3, a 4, and then a 5. That is why you see the market moving lower. Even inside this one here, we have 1, 2, 3, 4, and 5. But if you are looking to enter the market right here, because price broke this high here, you have to look in the lower time frame here to find the 7th wave. And then that's how it is. And also it's easy to predict the starting this one here to here. And then when price break this structure here, break of structure, we are starting, we have 1, a 2, 3, and a 4 that is trading inside the range of this wave. And then we have 5, and then we have a 6, and then we move forward to 7 and 8. And as I said before, that when price breaks the high and then trade below the 7th one, this is where you should be looking to go long. And clearly there are some valid price action here to go long to trade this move here. Another thing that I want to point out is that you can clearly see that price also swept this liquidity here. This video is about that. Obviously, on the last wave, you must see some kind of price action. There will be some price action. And we are looking at this low here to be targeted. And let me show you where mostly you'll find this kind of behavior in the market. Most of the time, you will see this patterns forming when price is about to touch the zone or maybe your point of interest. Point of interest, we have 1, 2, 3, 4, 5, 6, 7. On the 7th one, that means there will be some minor highs here where people will be looking to go short. And price will show some strong moves before it can start to show some reversals in the market. Price will move aggressively to the upside before it can drop lower, as I mentioned in the previous videos. So let's look at this one here. It looks complicated, but it's not. Here we have a move to the downside. This is an impulsive wave. Because right now, let's say someone will be looking at this and say this is our supply zone, this is our break of structure, then it will be followed by this low. People will think that, okay, this is a break of market structure, price will never trade above this high. Okay, even though, let's say you see something like this, because we don't see the market the same way. Let's say you see that we have this move to the downside, and then we have a high, and then we have this low. Most people will never think that price will trade above this high here. But when we look closely, you will see that price is making a 1, a 2, a 3, a 4, a 5, a 6, and then a 7. And as I said before, price will be very aggressive to the upside. And then you will look where to enter the market right here, unless if you're looking for another break of market structure like this, and then you confirm, and then price move to the downside. And also, if you don't see this area here, you can also use a line chart. It will show you those kind of moves here. You can clearly see on the line chart, we have a 1, we have a 2, we have a 3, 4, 5, 6, 7, and then we have a break of market structure here. This is how at least you can try to understand this. So let's move on to another example, because I don't want to make this video too long. Here we have a liquidity sweep, but the problem lies on this area here. On this area, we don't clearly see the 7th move because we are still on the higher time frame. Okay, I hope you understand it. You won't see those kind of moves because we are still on the higher time frame. You see the price broke this low here. Even here, you can see this one, we have already done it. It's very clear on this higher time frame. But on this area, you see that price is breaking this low here and very aggressively. If we move on to the lower time frame, let's say you want to catch this move here, the whole move. If you move on to the lower time frame, price will be very, very clear. You can clearly see that price is very, very clear from here. But this time, we are not going to use so many things. Let's look, let's count our waves here and see how many we got. We have this area here. We have a move to the downside. This is our 1. This is where we are targeting the liquidity to be swept. And then we have this as our 2, and then we have 3, and then we can clearly see that this is not 4 here because price trade above it. We have 4, then we cancel this 1 because price is trading inside this range, and then we have a move to the downside, which makes our 5, a move to the upside 6, a move to the downside 7, a move to the upside, and then a move like this, and then this is our 8, and then we have the last move here. This is our 9th wave. Even if you tried to enter here, you will be stopped out, and then you should focus on the 9th wave. The market will always give you that move. I hope you understand it very clearly here. Even if you tried to enter the market right here, the market will move and then it will come and stop you out. Focus on this one, and then you can catch the move to the upside. And this kind of thing, they are everywhere. Even if I do something like this, can clearly see everything. They are everywhere. Even in here, we have them. And then that is why you see a strong move to the upside. After this moves here, the market will move aggressively. Okay, I hope you understand it. And if you want this PDF for practice, you can find it in our Telegram files and also on Discord. I'll post them there. So here, sometimes price is likely to come and make some funny moves around this area. If you don't have any entry model, you can use a break of market structure to look for those kind of moves after price has traded above or below the previous swing high or low. Okay, and here, can you guess if it's a 7 or a 9? You can leave a comment below, but for the purpose of this video, I'll give you a hint. Tell me which one. Is this a 9, a 7, or a 9 here? This is a question. You can leave a comment below. So let's look at this one here. This is a clear high here. We have a clear high, but which one is this one? Before we can see this move to the downside, we can clearly see that here price broke this previous low. So that means we won't start counting from here. This is not one here. We cancel this one. One is here. We have 2, 3, 4. Why we say this is 4? It broke this low. And then we have 5, 6. And then is this 7? We'll put your question mark. Is this 8? We'll put your question mark. Okay, I hope you understand it. That right now it's going to be a little bit confusing. And then we have this 9 here. But the problem is that the 8 broke almost this low here, the internal low. That is why we have this 9 here. And then a sharp move to the downside. But this is not complete. If you were looking at the market like that, if you count again, you will see the structure very clearly. Firstly, look at the lows and highs here. Before the market can liquidate this high here. This will be very, very clear. So right now we have this 1, 2, 3, 4. And then because right now we broke this, this will be like this. And then we have 1, 2, 3, 4, 5 here, and a 6, and then a 7 here. Why? Is because price broke this high and this low here, so which makes this a little bit difficult to read. And as I said before price can liquidate this high, we have to see an aggressive move to the upside. Okay, I hope you understand it. Let's move on to the last example here. And as I said before, when price doesn't even retrace to any area, that means price is very impulsive. And we can clearly see that after price has liquidated this high here, if we read price section from here, you can clearly see that we have this structure here. This is 1, 2, 3, 4, 5, 6, and then a 7. And then this is where you should look for sell. This I think was on the 1 minute time frame, if I believe 1 or 3 minutes time frame on GBP JPY. So this is how at least you can try to understand these things here. It's not that difficult if you put more practice onto it. Okay, I hope everything was very clear on this video. And lastly, if we look closely, you can try to read even this one. Look, the price is still in a range. Sorry, my lines are not straight enough. This is the 7th wave here. 1, 2, 3, 4, 5, 6. And then 7. That is why you see a move to the upside. And then lastly, for the move to move lower, you can clearly see that we have this high here. We have 1, 2, and then price is trading on this range. So that means it's not impulsive. And then we have the 5th wave here. That is why you see a strong move to the downside. Even on this area, even if we count 1, 2, 3, and 4, and we can clearly see that the 4 here, 1, 2, 3, 4, and then we move 5, 6, 7, 8, 9, and then we have the 9th wave here. That is why you see this move moving to the upside, because we don't have the price here is just touching or trading inside the previous range like this. I hope this video was very clear to understand where the market is likely to react. This video basically was that you have to count the internal waves before you can see this kind of move. I hope this video was very clear. Please consider subscribing to the channel for more videos like this one, because this video I was very slow because you guys were saying that I'm very fast, but I hope this time I was very slow. If you like this kind of format, please consider leaving a like and subscribe, and also share this video with your fellow friends and tell me where did I go wrong. Also leave a comment below. You can also bully me in the comment below because I know you guys. I'll see you on the next one.